We are led to believe that members of Congress are some of the best investors of all time as they continue to outperform against the S&P 500, and with the latest data for 2024, that is no different. In fact, the vast majority not only outperforming the S&P but massively outperforming. We can in fact see the top 5 have outperformed at a triple-digit rate, but it isn't something that is a one-off. If we to take a look at the same performance in 2023, we get to the exact same conclusion. In fact, we're talking more than 90% of members of Congress massively outperform. Again, we just want to reference that it isn't just 1 or 2 years. We can clearly see, for example, in 2022, where the S&P itself returned negative 18%, nearly every single member of Congress outperformed, and as we can see, there are some with some very stellar comparisons. 2021 as well, just to finish off the comparative, both Democrats and Republicans outperformed the S&P. Now you could argue this is something that shouldn't stand, and we did hear just before President Biden departed to make way for Donald Trump, saying that he does support a congressional stock trading ban, and now Donald Trump does sit as the president of the US. It will be interesting to see if any of these issues are brought up, or in fact this is something that is going to continue over the longer term. Now, as the saying goes, if you can't beat them, join them. So what we have here are members of Congress and their latest trades. We've gone through every single one of them in the more recent period. We've done a dedicated episode, in fact, to Nancy Pelosi, but today we want to see over the last few weeks what stocks have members of Congress been buying, and are these ones we should add in our own portfolio to not just outperform the S&P, but to massively outperform. Now, we're running through 8 of these stocks. The first one that they have been adding quite a significant amount to their portfolios is AMD, Advanced Micro Devices, also known in the community as Advanced Money Destroyer. Over the last year, down 37%, but for those that have been long-term shareholders, you would be up more than 3,500. Again, that is a significant outperformance of the S&P. Right now, this company trades at the lower end, in fact, right near its 52-week low, with both Wall Street seeking alpha and clearly members of Congress calling this company a buy. Now, for each one, we also want to highlight the growth of this company, where straight away AMD gets an A, but the real factor we want to bring to your attention is what is the earnings per share expected growth over the next 3 to 5 years, and we notice AMD 43% year-on-year anticipation, which is a lot higher than not just the sector comparative at 14.8, but also a lot higher than their own 5-year historical average of 32.6. We also want to reflect on how their performances have been against earnings, and over the last 4 quarters for AMD, at a bare minimum, they have either been in line or a marginal beat, so a nice 100% track record, and over the next 4 quarters, as we just highlighted, they anticipate double-digit growth to the EPS on a year-on-year comparative, and based on the December 2025 earnings per share target, right now this is a company that is trading at a forward P of 23.9, which when we do look at it in terms of the valuation aspect, does sit lower than the sector median. So right now, if you're buying this company, you are getting a 6% discount, but not just that, you are also getting a company that is trading significantly lower, in fact 43% than their typical 5-year average forward valuation, which does sit at 41.9. Now, for each of these companies, we do want to run them through our own valuation process, where we get to $190 for AMD, derived from the DCF model. Now, we'll quickly show you how we got to this figure, but we have the free cash flow year on year. Average growth rate is negative, given it has gone some years from negative to positive, but forward looking, we have gone 30%. Bear in mind, we have a low, medium, and high, and these numbers are subjective. You can always grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether for AMD or any others. But based on 30% with a discount rate, we get the present value of future free cash flows and terminal value, add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as we can see here, 190 indicating 68% upside. Now, we've actually done an AMD in-depth video, so check that out if you want to learn a bit more about the numbers, but we'll just show you very quickly here. For those that believe it's 25% more accurate, and for transparency, that comes to $137, 21% upside, and for those that see 20% as a more reflective value, $98, negative 13%. In fact, that translates to downside. So using the 30%, which as we said, we have covered in a deeper dive, what we typically like to do is add a margin of safety, minimum 10%, where we execute on that if it meets our 3 golden criteria. wide moat, strong financial metrics, and good forward-looking data. If you believe that today a buy at around $171, then we keep going till it's near the current trading price. And what we can in fact see for AMD right now, you are getting quite a significant margin of safety, especially given the fact it has dropped significantly from its all-time high. So 40% MOS, 31% is where Wall Street see this over the next year. Their price target, $148. But as always, give us your thoughts in the comments below whether you believe these companies that members of Congress are buying are a buy, hold, or sell. We also want to let you know we have just released our latest free weekly article. We drop one every single Monday morning to your inbox where we cover severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up, read straight away, where you'll be able to gain access to 45 undervalued stocks for the month of February. Lots of information for each one, the upside that Wall Street themselves see over the next year, and on top of that you can grab a spreadsheet of 32 stocks that Wall Street believe right now have the most upside in the S&P 500. So click below, you can sign up and read straight away. The next stock members of Congress have been adding is Salesforce, one we've covered actually a few days ago. We do like it ourselves. Over the last year up 13%, over the last 10 years another outperformance of the S&P, up 412%. Right now trading at the upper end of the 52-week range. Wall Street also consider this company a buy, and they do pay a dividend on the lower end at 0.5%. If we were to take a look at their growth, they get a nice B+, and if we specifically drill down to the EPS, we can see anticipation of 16% year on year, a little bit higher than the 15 of the sector comparative, but it does sit a little bit lower than their own 20% from the last 5 years. In terms of earnings, moving forwards, they do anticipate growth each quarter over the next year. However, over the last 4 quarters, they did miss, and notably on their most recent earnings, giving them a 75% track record. In terms of the EPS estimate at just over $11, this in turn does give the forward P of CRM around 29.1. In comparison then, based on the valuation of an F, we can see it does trade at a 27% premium to the sector, but on the other hand, it actually trades at a fairly large discount to their 5-year average of 23%. When looking at this company's intrinsic value, we get to $371. Now we have the 3 rates for Salesforce today, 10, 12, 14. We've gone 12% moving forwards, which does give us the 371. And when we do look at a margin of safety for this company, you aren't getting 15% just yet. It's sitting somewhere between 10 to 15, and Wall Street themselves, they see this at just under $400 over the next 12 months, translating to 22% upside. Similar to Nancy Pelosi, other members of Congress are adding to their Nvidia position. It is up 88% over the last year. No surprises, massive outperformance over the last 10, up more than 24,000%. Right now trading at the upper end of the 52-week range, a strong buy rating from Wall Street as well as a buy from Seeking Alpha, and they do pay one of the lowest dividends we have seen at 0.03%. In terms of their growth, you'd probably expect nothing less at an A+, and we can in fact see the earnings per share is expected to grow at just over 38%. Observation here is that AMD, we did see them in the low 40s in comparison, but Nvidia's is not just above the sector comparative, but also above their own 5-year of 27.4%. In terms of their earnings, over the next 4 quarters, double-digit growth to the EPS is what they anticipate, and they also have a 100% historical track record. They also currently trade at a forward valuation of 31.3, and if we do take a look, the sector median does sit lower, so in fact you're paying an 84% premium, but they do sit somewhere away their own 5-year average of 48. In terms of the valuation for Nvidia, we get intrinsically $180, which when we do look through the numbers, we have gone for a 25% growth rate moving forwards. If you want to see the different rates, you can see the applicable upside as well as downside. And given this number, we do actually get a margin of safety for Nvidia today, around the 20% buy at 144, at 25%, not there just yet. So for the AI giant, 20 to 25% upside. Wall Street themselves, $179 is where they see this over the next year, translating to 30% upside. The next stock members of Congress have been adding is the Walt Disney Company, down 1% over the last year. Over the last 10 years, it is up but only 6%. Bear in mind again, it will depend at which point you bought over the last 10 years. In terms of the COVID drop, it was trading around $86. It then hit its peak, as we can see, at March 2021, around the $200 mark. Right now, trading at the upper end end of the 52-week range with a double buy from Seeking Alpha and Wall Street, and it does pay a dividend at 0.91%. If we take a look at their growth, overall they get a D+, but specifically relating to the earnings per share, we can see 13%, pretty much in line with the sector comparative, but quite some way away, around 41% lower than their historical average of 22%. In terms of their earnings, they do get a historical 100% track record, beat after beat over the last 4 quarters, but moving forwards they only anticipate 2 of the next 4 to be positive, and based on September 2026, their next full accounting period, the forward PE does sit around the 18 to 19 region. In terms of a comparison, well, that still is above the sector, so you are paying a 38% premium, but a long way lower, in fact, their 5-year average of 42, so you're getting around a 52% discount to this figure. In terms of the intrinsic value today, we have got $129, which when we do look at the margin of safety at 10%, a buy at 116, at 15%, pretty much where we see this. Wall Street themselves, they also see $128 over the next year. This in turn translates to 16% upside. We then move on to Elevance Health, which is down 23% over the last year. Over the last 10 years, it has marginally outperformed the S&P, up 170%. Right now trading at its 52-week low or thereabouts, a strong buy from Seeking Alpha and a buy from Wall Street, and one of the higher dividend yield paying companies so far at 1.8%. If we look at their growth, they do get a D. Now in terms of the EPS, they're expected to grow just above 8%, which is lower than both comparatives at 10.5 and 12.6 respectively. In terms of the earnings, well actually they have missed their last 2, giving them a 50% track record, and out of the next 4 quarters, they anticipate growth to 3 of them, although quarter 2 we can see very marginal. In terms of December 2025, so their next full accounting period, this company trades at a forward valuation of 11.3, and when we look at the grade overall, a D+, but when we specifically look at the P on a non-GAAP forward-looking basis, they're trading at a 41% discount to the overall sector, and they're also trading at a 22% discount to their 5-year average. So our valuation gives us an intrinsic price of $519, which does give a fairly large margin of safety today. As we keep going, in fact, we can see you are getting at least 25% at the trading price of $389, $390. With Wall Street also bullish, we saw Seeking Alpha strong buy. Wall Street themselves weren't far off. $510 is where they see this next year, and that translates to 31% upside. The next company members of Congress have been buying is the Boeing company, down 9% over the last year. Over the last 10 years, up really only 16%. Right now trading though at the upper end of the 52-week range, we get a double buy from both Seeking Alpha as well as Wall Street, and if we were to take a look at their growth grade, they do get an A. EBITDA growth expected over the next year, 99%, above the sector at 7%, but lower than their own 5-year average of 106%, and we don't currently have an expectation for the earnings per share. What we do have to point out is not only they have missed and substantially their last 3 earnings, giving them a 25% track record, but currently the EPS estimate for this full year is negative 1.45. They do, however, anticipate growth over the next 3 quarters, and that is why when we do get to evaluation grading, given the negative EPS, we don't currently have a valuation on the forward PE, but we can see overall here they do get a D-, not looking good on the EV to EBIT forward looking, as well as the EV to EBITDA. So what about the valuation itself? When we run it through the model, we actually get an intrinsic value of $189, meaning right now we see this company trading around its fair price. If you wanted a 10% margin of safety, a buy at 170, at 20% around 151, at the 25% 142. But as we said, no MOS today. Wall Street themselves see this at $200 over the next year, giving this only 8% upside, and do give us your thoughts as we're going along today. The next company we're looking at is MasterCard, up 22% over the last year. Over the last 10 years, massive outperformance of the S&P, up 522. They're also trading at the upper end of the 52-week range, in fact near their all-time highs, with both Seeking Alpha and Wall Street considering this a buy, with a current yield of 0.54%. In terms of their growth, they do get a B. Earnings per share anticipated around 14%, which is significantly above the comparative for the sector at 9.8, but actually quite some way below their own 5-year average of 19.7. Always good to see, but maybe something we always expect with companies like MasterCard, green right across the board, 100% historical record, but also over the next 4 quarters, they do anticipate mid to high single-digit growth, and right now, based on the EPS for this year, this company is trading at a forward valuation of 35.5. No surprises then on the valuation, they do get an F, trading at a 206% premium to the overall sector, but they aren't trading that far off their own 5-year average, which sits at 37.5. In terms of the valuation for this company, very similar to the Boeing company, we believe it is around its fair price, but sometimes people are willing to pay a bit of a premium for high quality companies like MasterCard. For those that are interested, 10% MOS buy at 511, at 20% around 455, and at the 25% 426. As we said though, we see this trading around its fair price. Wall Street themselves do see upside of 11%, their price target over the next year $626. This takes us on to Bristol Myers Squibb, which is up 10% over the last year. Over the last 10 years, the first one in fact today, we have seen negative 11% over the last 10, trading at the upper end of the 52-week range with only seeking alpha considering this company a buy, and it has offered the highest yield we have seen today at 4.6%. In terms of their growth, they get an F. In terms of the EPS, anticipated around 9%, which is only marginally lower than the sector at 10.6, but quite significantly higher than their 5-year average of 4.24. If we were to look at their earnings, looking very mixed over the next 4 quarters, but we always like to see 100% track record looking at historical data, and right now the company does trade at a forward valuation of just below 8. In terms of their grading for that valuation at an A, looking pretty strong because in terms of the sector comparative, you are getting a 59% discount, and in terms of their own 5-year average, again, pretty much a very similar scenario. Remember, as always, you can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for BMI or any others. Then intrinsically, we get to $62, so we will get a margin of safety, not something we saw for MasterCard or Boeing, at 10%, a buy at $56. Right now, not the 15% just yet, sitting somewhere 10 to 15%. Wall Street themselves, price target $62, translating to 15% upside. And as always, give your thoughts on these 8 stocks, whether you're following members of Congress or you believe these are a hold or in fact a sell. Don't forget to sign up to the free weekly newsletter, grab those spreadsheets, come and join us as well in the Patreon where we do cover our weekly buys and sells. We have been making movements over the last few weeks given the volatility. And as always, have a great day. We'll see you all on the next one.